Target, ticker TGT, is up 10.80% year to date and up 0.43% from a year ago. Today, we are diving deep into its key financial metrics and ratios and use these valuation models to come up with an exact stock price at which Target is fairly valued at, and we're going to look at analysts' expectations. All this to find the answer on the biggest question of this video: what is the intrinsic value of Target? Keep on watching, as I will also give my personal opinion on this stock. But first, let me know in the comments on the side, do you think Target is worth it at its current price to add to your portfolio? Let's not waste any time and dive straight into the financials. Straight away, we notice some things we like to see and some things that are questionable. Let's start off with the obvious and the thing we love to see most as dividend investors. Looking at the dividends, the growth starts off real slow. From 2014 to 2020, it grew from only $1.90 to $2.68. But then it quickly picks up the pace. In only 3 years, it grows from $2.68 to $4.36. This is an insane growth in dividends. Take a look at the 10-year and 5-year dividend CAGRs. The 10-year dividend CAGR is 7.28% and the 5-year CAGR 11.59%. The thing that I am always looking at straight away when I see a company continuously raise their dividends is the free cash flow. Because remember, dividends are paid out of free cash flow. And here is something I don't particularly like to see. The free cash flow per share is all over the place, even being negative in 2022. In 2014, it was only $4.37, and in 2020, the peak of a certain virus, the free cash flow was $15.82 a share. Despite this bouncing all around, the dividends are pretty safe. As we can see, the free cash flow payout ratio is 52.40%. This leaves about half of the cash left over for other things, like pay down debt, attempt mergers and acquisitions, and buy back shares. And as we can see, Target is doing a phenomenal job of that. In 2014, the total shares outstanding was 635 million, and 10 years later, only 562 million. The starting dividend yield isn't too crazy, 2.73%, paying out $4.40 a year. But would you have invested in Target 10 years ago, your yield on cost would be nearly 7%. So now that we've gone through the financials, let's take that and move over to the valuation models and find the answer on the biggest question: what is the intrinsic value of Target? Please do me a favor and hit that like and subscribe button, I'd appreciate it. Starting off with the discounted cash flow model, which uses the future free cash flows in order to determine the intrinsic value. By plugging in the historical free cash flow and using a growth rate of 7% and a discount rate of 9%, we can calculate the present value of the future free cash flows. By adding the cash and cash equivalents and subtracting the total debt, we get an equity value of the company. By dividing this by the shares outstanding, we come to a price per share of $192.63. Step 2 is to find out if the dividends paid are actually sustainable. For this, we need to put the dividends and free cash flow per share next to each other. We can see that the dividends, as mentioned earlier in the video, start off real slow in its growth but pick up the pace in the last few years. The free cash flow, however, is all over the place. Not counting in 2022, we can see that the free cash flow is well above the dividends all the time. The free cash flow payout ratio ranges from 17% all the way up to and over 50%. Despite this, the dividends are very safe for the time being. But don't let yourself get fooled. History isn't a guarantee for the future. Let's move on to the next valuation: the dividend discount model. By plugging in the historical dividend payouts, we get an average growth rate of 12%. Using a discount rate of 9% and a growth rate of 6%, which is much lower than the current growth rate but very sustainable for the long-term future, we can calculate the stock price, giving us a price per share of $155.47. Next up is the multiples valuation model, which assumes that similar companies should be valued the same. Companies that are similar are Walmart and Kroger. Using the price to earnings ratio of these companies and the earnings per share forward looking of Target, we come to an intrinsic value of $229.70. I don't just want to evaluate Target using other companies, but also compare Target to its own history. So let's take it a step further and look at the history of the PE ratio of Target. The thought process behind this ratio is as follows. The lower the ratio, the cheaper the company, as you pay less money for each dollar Target earns. We can see this steadily being between 10 and 20. The last model I want to use is Graham's valuation model, named after Benjamin Graham, the mentor of the great oracle of Omaha, Warren Buffett. This model calculates the intrinsic value using current market conditions. By plugging in the variables EPS, projected growth rate, and the current yield on AAA bonds, we get an intrinsic value of $140.19. The thing with this model is that it is too reliant on market conditions. Let's say we would have used this model on Target in 2020. The current yield would only be around 1.5. This would change the intrinsic value to $468. After calculating the intrinsic value using numerous valuation models, we come to a stock price of $179. This is higher than the current market price of $157.80. I also like to use a margin of safety, as suggested by Benjamin Graham. By using a margin of 10%, the acceptable buy price is just a little bit above the current market price. So let's see what analysts have to say about Target. And the analyst consensus is that Target is a buy. In my eyes, Target isn't really a fancy, high-rolling company, but just a business that can build the fundamentals of your portfolio. After watching this video, did your opinion change at all compared to the question I asked at the beginning of the video? If you are looking for a high-rolling, future-focused stock, which is an absolute beast in growing its dividends at a far greater rate than Target, then check this video out I made on Visa, diving deep into its latest numbers and valuating the company. Thanks for watching, and please consider subscribing to the channel and liking the video. I hope to see you in the next one.